Hey everybody, it's Larry Berman here. Exciting start of the World Series. So Canada, let's get a Go Jays go. This is the October not classic episode of Berman's Call Weekly. And so digging into the chart rooms, I don't have a lot to show you this week. We have some economic numbers to look at. We had the Fed to think about, but really equity markets at all-time highs in an October where the risk factors to me are off the charts. This is not a classic October. We didn't have a classic September. The odds of having a classic November and December seem low to me. Trump is on his Air Force One on his way to Asia, and he's going to meet with a bunch of different people, including around the end of the week, President Xi, if they go ahead with it. I expect they will. There might be some pomp and circumstance around it, but I just have this gut feeling, which is a terrible way to trade, but that there's going to be an escalation before there's a cooperation. But remember, Trump won. Great deal, and China bought no soybeans. Trump remembers that. He remembers that he was embarrassed by that. And while he doesn't want the stock market to go down, his ego is bigger sometimes than that. So it'll be an interesting week, to say the least. The Fed will cut rates. There's nothing stopping them from doing that at this meeting and signaling they're going to continue to proceed on a data-dependent basis. So we got some data out of the government. I assume it's clean, but you never know. Super core was slightly better than expected. Overall numbers slightly better than expected. When I heard all the analysis and read everything that came out of the street, it was this much better than expected, but it wasn't worse. So markets celebrated that as we sit here around 3:30 Friday afternoon. S&P is up about 1%. NASDAQ's up a little more than that. Russell 2000 up a little bit more than that. Basically, markets at all-time highs. So, when we think about the inflation story, it's contained, but it's still north of 3, and it's unlikely to go much lower than that until the end of next year. So we still have some hurdles in front of us from that perspective. Whether the government gets back to work with a long-term or short-term continuing resolution with Trump out of the country and Congress out, it seems unlikely. We'll see that this week. You can bet we will see it before Thanksgiving with a long-term CR, U.S. government operating without a budget. It's not like it's the first time. And really, from a market perspective, it doesn't matter. But in doing that, they make it a midterm election item. And I think both sides are willing to go to bat on that. So that's probably the likely outcome at this point. Whether we get non-farm payroll report on the 7th of November, yet to be determined. I doubt we do. So looking at ADP being the next employment data point, the trend here has been terrible, supporting, rate cuts. But at some point, if we're not growing jobs, the equity market can't keep going up here. Rate cuts are not going to help fix the structural challenge here. If you X out artificial intelligence and the CapEx from that and all the benefits from that, believe me, there are lots, then you can justify the multiple today. But the real economy outside of AI spend is actually flat or shrinking. Hard to debate that when you look through the numbers. So equity markets at all-time highs. We commented 2 weeks ago about this reversal pattern likely marking a high. President Taco walked it back. The data being supportive. We'll see where it grinds up to, but chasing it here to me makes absolutely no sense. But then again, I'm an old guy and I don't understand the modern economy apparently. Anyways, that's all I have this week. Be cautious, folks. It's not a bull market rally to chase. It is a squeeze, no doubt.